The video for today will focus on the housing market, covering topics such as home prices, real estate, and the rental market, making it relevant to a wide audience. I'll be presenting data on this topic, which I update on a monthly basis, using February data as a reference point since it only became available in late March. Once the data for the month of March releases, I'll update you. So let's begin. What we have here is a 3-year chart depicting the trends in home prices. As of February, the median sale price of a home is $386,527, which has dropped by 10% from its peak in May of last year. However, it's important to keep in mind that seasonality plays a role in this decline. It's crucial to note that comparing this year's February home prices to that of last year's February, there's only a slight decline of 1.1%. Furthermore, home prices have actually increased from January to February, with the median sale price rising from $383,249 to $386,527. This indicates a month-over-month increase in home prices. Moving on, let's shift our attention to mortgage interest rates. Presented here is a 1-year chart depicting the 30-year fixed mortgage rate sourced by Freddie Mac, which surpassed 7% in late 2022. While there's been a slight decrease in the rate since then, they've mostly been stable since. Now I'd like you to shift your attention to this 3-year chart, which shows the number of homes sold each month. Year over year, there's been a decline of 22.1%, which is an improvement from January's 33% year-over-year decline. However, it's worth noting that the number of homes sold in February is higher than January, but this can be attributed to seasonality. Despite this, the number of homes sold is still at lower levels compared to prior years. It's important to bear in mind that ultimately home prices are influenced by the laws of supply and demand. While it's true that demand has declined due to higher interest rates, it doesn't necessarily mean that home prices will plummet. For a significant drop in home prices to occur, there would need to be more selling pressure than buying pressure. It's uncertain whether this will happen or not. However, currently home prices are not crashing because the supply has also decreased, resulting in fewer sellers. Now let's examine the supply side of the equation. As of February, there are 1.3 million homes listed for sale, marking a 15.9% improvement from last year's February data. Although there's an increase in supply, it's not a substantial surge of new inventory. The 3-year chart illustrates that supply is still notably low compared to the levels observed in 2020. Nonetheless, I want to draw your attention to this crucial piece of information. A 5-year chart that displays the percentage of homes sold above list price. In February, 23.6% of homes were sold above the list price, indicating a higher figure than January's 21%. This percentage has now returned to pre-pandemic levels, which is excellent news for those searching for a new home. Nevertheless, suppose you found the ideal home and are contemplating offering more than the list price. In that case, it's not uncommon since 23.6% of homes are being sold above the listed price, similar to pre-pandemic levels. If you're a seller, it's crucial to manage your expectations realistically since the market's not the same as it was a year ago. These statistics are based on national averages, so while some regions have experienced a 30% decline in home prices, other regions have seen significant price increases that continue to rise. Therefore, the situation may be very different, either for better or worse, depending on your location, state, or city. Let's review some predictions for the future of the housing market. According to Yale economist Robert Shiller, he anticipates that home prices may become, and I quote, a little cheaper after another 6 months. Shiller's rationale is that he expects the economy to weaken and unemployment rates will rise, resulting in fewer Americans interested in purchasing a home, which will decrease demand and drive prices down. However, Shiller does not foresee a housing market crash, as he expects prices to only decline slightly. The National Association of Realtors has a different prediction for the future of the housing market. They anticipate that mortgage interest rates will decline more rapidly than expected due to the current banking turmoil, leading the Federal Reserve to reduce their aggressive monetary policy. This in turn will improve home affordability and generate more demand in the market. Senior economist Azzillo forecasts that home prices will continue to rise on a monthly basis in the spring, but will still show a slight year-over-year decline similar to what was observed in February. Pay attention, when you analyze home prices from their highest point, they've fallen by 10% since 9 months ago, which is actually better than the 11% drop we saw in January. I anticipated that prices would decline by 10 to 15%, and we'll see if I'm correct. What do you think? Do you believe that we'll experience the most significant housing market collapse of our lifetime? Personally, I don't believe so, but that's only my viewpoint. Let's discuss the rental market situation now. The growth in rental prices has been slowing down due to the rise in supply and a decrease in demand. Although rents are still increasing, the rate of increase has slowed down for the past 5 months. However, there was a slight increase from January to February. Here's a chart showing the median rents across the U.S. for studios, 1, 2, and 3-bedroom apartments, providing an overall idea of how rental prices have been changing over the past few years. The rental market experienced a significant increase in prices over the past few years, but now it's gradually slowing down. The previous chart showed the actual dollar amounts, but now let's take a look at the growth rates. Although rents are still higher when compared to the previous year, the rate of increase is slowing down. As you can see from the chart, the peak was 11 months ago, and since then it's been decreasing. However, the situation varies depending on your location. So your state, region, or city could have different rental price trends. Rent.com has created a map that shows the change in rent prices year over year. Some states have experienced a decline in rent prices, while others have seen an increase of 20% or more. Lastly, let me show you this one. These are the top 10 most expensive rental markets for one-bedroom apartments. 10. Arlington, $2,280 per month. 9. Washington, D.C., $2,300 per month. 8. San Diego, $2,330 per month. 7. Los Angeles, $2,370 per month. 6. San Jose, $2,490 per month. 5. Miami, $2,600 per month. 4. Jersey City, $2,980 per month. 3. Boston, $2,990 per month. 2. San Francisco, $3,000 per month. 1. New York City, average of $3,550 per month for a one-bedroom apartment. The experts predict that renters will experience some relief in 2023 as rent prices are expected to cool down for the rest of the year. According to CoStar Group, 500,000 apartments will be available for rent this year, increasing the supply and giving renters more options. Additionally, there's an interesting trend in the average apartment size over the past 10 years, which has gradually decreased from 941 to 887 square feet, resulting in a loss of 5.4 square feet per year. While this trend can be interpreted in various ways, it's worth considering the reasons behind it. Is this trend of decreasing apartment sizes due to inflation and the declining standard of living for average Americans, where they pay more and get less? Or is it due to smaller families and changing demographics? Let me know what you think. Moving on to more specific details, we can observe the average size of new apartments by region. As the saying goes, everything is bigger in Texas, with the South having an average of 993 square feet, while the smallest new apartments are found in the Pacific Northwest at 776 square feet. Take a look at your specific geographic region to see how it compares. That's all for today, and I'm excited to report the March figures when they come out in late April. Don't forget to subscribe, and thanks for watching. Until next time.